Hello and welcome to this special broadcast. I'm Vivek Law. We are going to, over the next 15 to 20 minutes, decode the Narendra Modi-led government's second innings, first budget by the Finance Minister, Nirmala Sitharaman, her first budget. What did it have in it for your wallet? That's what we're going to talk about. Joining me is Surya, Bhatia, well-known certified financial planner. If you have any questions, kindly put them up out there and we'll be happy to answer as best as we can. Well, from a middle class person's point of view, nothing at all as far as tax changes were concerned. There's just one incentive and that is if you were to buy a home for yourself up to 45 lakh rupees, you get an additional benefit and we'll talk a little about that. Some interesting structural changes to the NPS, much needed. But no changes at all in the tax slabs for anyone who's earning up to 2 crore rupees. So, of course, a big blow to those earning over 2 crore rupees and especially those earning more than 5 crore rupees. But that's a very small percentage of Indians. But for most of us, very little changes. Of course, directionally, a lot of talk about how to take India to a $5 trillion economy, and that indirectly affects us. If you're an investor, that is obviously going to lead to better returns for you if India was to grow at 8% for the next 5 to 6 years. Surya, good roadmap. Markets were not too happy, I guess, more to do with the tax on the super rich, the HNIs, as well as the decision to further broaden the public shareholding percentage from 25 to 35%. That's why probably the market reacted, but otherwise nothing at all on the tax side, so to speak. For
I think you should take it the way that the interim budget was the main budget, and this was just kind of ironing out the edges of that budget, and that was what it was made out to be. Yes, the markets reacted a little violently because of the fact that you found that the public holdings of the markets increased from 25% to 35%. Thereby, a lot of companies have to offload their equities and increase the public participation, which many companies may not want to do that, but then you don't have an option. So the advantage lies with the retail investor because they can participate in good stocks now, but the disadvantage could be that some companies may say that I want to delist now from the stock markets. So it could be a double whammy depending on how you really can take it forward from here. But broadly speaking, markets did not like that, also because of the fact that you found the super rich getting taxed at a higher rate. From a tax rate of 36%, the tax rate become 43%, more or less, for an income exceeding 5 crores. For an income exceeding 2 to 5 crores, between the band of 2 to 5, the tax rate from 35% becomes 38%. So that's a 3% jump in that, and 7% in the income beyond 5 crores. So that's why markets, I think, reacted a little negatively and went down. In the initial phases, markets were actually just kind of remaining calm. But at the end, when it was really coming out in open, I think market just kind of discounted that fact. And I think, but you should look at from the positive, saying that yes, I'm going towards an economy of a $5 trillion in the next 6 years. So if I can help myself to participate in the growth of the country, then why not? Maybe I'm not getting any tax stops or any other advantage. But if I'm an investor and a savvy investor and I can plan my investments well, I should participate in that rally to ensure that if the country touches this kind of economy touching the $5 trillion, how can I also participate with my own little money to make my pool of money, create a corpus for myself, which can actually help me to achieve all my financial targets, my financial goals which I may have. So the key depends on you, how you take this up. But the idea over here is make sure you participate in the market's growth, economy's growth, and help yourself to create a nice nest egg for yourself.
With no changes in the tax structure, and in fact, we keep hoping and expecting that every budget the government is going to give us something. I think we are fast moving towards a regime where the government will say that, look, our job is to facilitate growth. You're going to work hard towards lifting the economy and making the country grow. As far as your investments are concerned, as far as enhancing your income is concerned, you've got to do some work yourself.
And that's the way it should be, honestly. I think, why should I always look at the government to give me SOPs and have been being fed by them every year in some form of SOPs? Look at the brighter side. They could have increased your tax rates, which they did not, because I'm actually in a currently fiscal deficit mode. So I could have very well done that. So look at the brighter side of that. It could have hurt you even more than what it is right now. So if the economy is moving towards the better economy, the key for you is how you can also run with them and participate in the growth. That's where the key lies over here. how can I ensure myself that I'm also able to participate and make myself do well over the next few years? That's what's really important for you. And please make sure you participate in the growth run, which I also personally believe that over the next 3 to 4 years, we will actually see a good impetus happening where the economy's growth is actually going to be a multi-folding impact.
We are live here on Twitter. If you have any question, any comment, any suggestion, specific question on how this budget is going to impact you, Surya is here with me. Please shoot in your questions. We are live here with you. Surya, one announcement that came through is that in its zeal, if one may say so, to boost disinvestment, the government now wants to put a PSU ETF. That was a route adopted by the government to do a fair amount of, disinvestment. They want to give it the same treatment as ELSS, and she specifically mentioned ELSS. Is that a very good thing from a retail investor's point of view? Because you keep saying, and a lot of experts keep saying that, avoid, if you're a new investor, first-time investor, avoid a thematic or a sectoral fund kind of a thing. A basket of PSU shares is a thematic fund, so to speak. And yes, ETFs are far cheaper and we need to encourage them in India. But if you're going to sell basket of shares in a certain theme like a PSU, do you think that a retail investor should not get carried away seeing the tax break and start jumping to it instead of going through with a diversified fund like an ELSS?
I think a diversified strategy definitely is far more superior for any retail investor vis-a-vis if I compare with even an ETF of, let's say, of a PSU. The tax ops are equal in both the schemes, so don't go by that alone. Look at what will be a better one for investment for you, net off maybe the expenses, because that's what really matters to you. We always believe that a multi-diversified strategy will always be a better option in the long run, and that's also for the reason that because a tax saving comes with a lock-in of 3 years, which an ELSS comes with currently, will definitely have an edge over and above what a PSU, which typically, as you rightly mentioned, is a thematic / sectoral call. So while it may do well in the short term, will it do well for 3 years at a stretch? We don't know. So then why not stick on to the strategy with the probability of you doing better over a long run, even beyond 3 years. It does not mean that once my lock-in gets over, I need to redeem that. If I can actually hold for the next 5-7 years, because that's a diversified strategy, hold on for a long period of time so that the assets percolate to give you a better inflation-adjusted return. And we believe that this strategy is having a much superior return vis-a-vis your PSU sector. Because the multi-cap can actually buy PSUs also, but the vice versa is not true. So therefore, just prefer to have a multi-cap strategy over and above the PSU strategy.
Good news for home buyers, up to 45 lakh. And yes, you're not going to get prime properties in the middle of a metro, heart of a metro, but a large part of India lives in tier 2, tier 3, and I think 45 lakh is a very good amount for you to buy a home. And the tax incentive seems to be quite good as well. The finance minister in her speech said that you will end up saving about 7 lakh rupees in interest outgo over a period of 15 years of a loan. How should somebody approach this tax benefit?
Definitely is an advantage. Why not? Anyone who's looking at to buy a property for its own self, especially for the ones who want to look at a tier 2, tier 3 cities, they can actually buy a nice decent home for this kind of money of 45 lakhs, and which allows me to have a housing loan on that, which gives me an extra tax op of extra 1.5 lakhs. So, and I can claim that benefit over the next 15-year period, depending on whatever term of my loan is. And so therefore, but the only catch is that I need to take a loan by 31st March of 20, because this SOP is available only for this current financial year. So if anyone who wants to look at this as a strategy to optimize this tax saving, but also want to look at more from our own consumption for own residential purposes, it actually makes more sense for that person to buy the property and don't look at it from an investment perspective. Because you have to then look at from a point of view that whether real estate will really turn around and give you a better return. So you don't go that path. If you want to use it for your own residential usage, please go ahead.
Good news coming on the NPS front as well. The new thing is that, again, we await a little more clarity on what the rules will be, but the government has said that all the central government employees who contribute, that's the tier 2, those who contribute will be able to get a 3-year lock-in benefit under ATC. So we need to still understand, because NPS was under ATC, and of course it had that additional 50,000 as well. But there was a much longer kind of a lock-in. So what does this 3-year mean? That I can withdraw money after that, we'll have to...
I think the fine print needs to be seen on this, but it comes out on a prima facie is that they're trying to compare again with an ELSS over here, which is the only instrument right now under an ATC tax umbrella. It's just a 3-year lock-in. So if I look at a similar apple-to-apple comparison, so they want to look at something, can I offer an NPS, which could be a separate basket within the overall NPS regime, which I can have an option to withdraw. We don't know, we need to see the fine print. Have an option to withdraw post 3 years. So if that's the case, it could be a good instrument to look at.
Also the thing that they have come out and announced, announcement was made earlier, but they've implemented it, is the commutation. So you can commute now up to 60% of your contribution to NPS will be tax-free, which is great compared to 40% earlier.
Yeah, of course. I think that's where the NPS was lacking earlier, that my NPS SOPs were not so tax-friendly, tax-efficient vis-a-vis if I compare with other tax-friendly instruments. And that's why NPS did not see that kind of growth which was expected when this category was launched. So from a 40% commuting, which was tax-exempt, increasing to 60% is definitely the move in the right direction. And we believe that things will actually improve as you go along. So maybe this becomes one of the, like a likewise 401k plan which US has, something on similar line which gives you a very good tax SOP, provided you hold for long term. This is also good for the economy because then the money stays for long term with the companies, and they can actually invest for long term and develops the country.
I just wish though they wouldn't make such frequent changes and they would put it on parity with
That's
some of
the way
other
it should be.
products.
It should be just be made at parity with the other products available right from day one. So don't let the retail investor confuse with all these small changes, and just bring it out once for all. Coming out every year with some little bit tweaking here and there is not the call of the day. So I think just go ahead and do it, and then let the investor focus on what he really wants. Why not? I have made this product very tax efficient right from day one. It's only so many years now for the NPS.
A lot of processes that seem to have been looked at and attacked in terms of making them simpler. So for example, if you don't have a PAN card, your Aadhaar is sufficient. There are far more number of people with Aadhaar than with PAN. Secondly, for a lot of the freelancers, consultants, who are not salaried, but having to file GST returns every month, now you need to only do it quarterly. Then again, pre-filled income tax return forms will come to you. So a lot of the a lot of the work will actually get done by the tax department. And again, there was a lot of thrust in different areas to eliminate the physical interaction that you have with the tax officer.
I think that's a call of the day.
Things,
absolutely.
Right?
Spot on. I think these are the call of the day. You have to go through these processes, make it more digitalized. That's what the intent was also coming out. How we can make it more seamless and try to avoid having a face-to-face interaction. So they call it faceless transactions should be actually happening. So whether it be IT filing, whether it be even scrutiny. So scrutiny is also coming in the e-scrutiny way. So e-scrutiny is happening, your tax filing, you're getting a pre-filled up forms, my GST return actually getting from a monthly to a quarterly mode. I think these are all the steps in the right direction. So that's the credit needs to be given to the government and the finance ministry for this. And at least the intent is there to make the country more digitalized and make it more friendly for the investors as well as the tax assessees.
All right, that was a short and sweet summation of the budget. No real tax SOPs for most of us, but lots of process-driven changes. Good news for NPS investors, good news for home buyers. Gold, not so good. Increase in the customs duty from 10 to 12.5%.
Yeah,
that will make it dearer.
That's right, but gold you should not look at more from an investment point of view. I think beyond 4-5%, which we always say about gold as an asset class to look at our overall kitty, we Indians by default have that kind of a percentage in our overall portfolio. So actually it should not be a big deterrent, but yes, my import duty goes up, so the cost of buying gold goes up.
All right, we close this session on that note. Thank you very much. Of course, we will keep bringing you more and more updates around your personal finance here on the Money Mile. If you have any questions for us, feel free to go to our handle and post your questions. We'll be happy to take them at a later date. Thank you very much.
Thank you.